Parker of Credit Suisse, who's with us on a phone line. Mr. Parker, thank you very much for your time. Appreciate it. What do you make of the news coming out of this part of the world, sir? Surgical strikes by the Indian Special Forces across the line of control.
Well,
of course, yes, go on.
The first point to make is that, in fact, the reaction on the currency markets has really not been that extreme in the sense that we're currently trading at around just below 67, and obviously we were at that level, in fact, just above 67 back in late August. So yes, there has been a modest move on the currency markets. There's been obviously a more pronounced move on the equity markets, which, as we talk, seem to be now forming a base. But obviously the Indian equity markets have been hit today and are one of the few Asian markets which are down today, and the move down by about 1% on the Sensex 30 compares with, for example, the Shanghai Composite today, which is up about 0.4%. And, I think the overall point to make is that whenever there is geopolitical risk, investors immediately react negatively. Then, the key question for investors, whether they're Indian or foreign investors, is this just a one-off surgical strike, as the media are describing it, or is it going to escalate into something more serious? So I think you've got a number of phases in terms of investor behavior. Phase one is obviously negative, and we've seen that with a small move on the currency and this move on the equity market. Phase two, I think, is to stand back and watch to see whether things escalate or not. And then if it is a short-term incident and does not escalate, then you will see investors coming in as buyers on the setback that we have seen. And as a general rule, unless there are major geopolitical problems, incidents like this tend to have only a short-term impact on markets.
So you don't expect long-only ETF investors into India pulling out money?
I think their initial reaction, as I said, phase one will be negative. And I would argue, phase one we saw, earlier today. I would argue now we're probably in phase two, which is investors sitting on the sidelines and watching for more news. If we see any further escalation, and at the moment we seem to have a little bit of a war of words. We've had a reaction from the Pakistani government. And, at the moment it's just a war of words, but obviously if that translates into negative actual action on the ground, then investors would start selling and, phase one, i.e. the initial negative reaction by investors, would be extended. But at the moment, I think investors are sitting on the sidelines and hoping that this does not escalate. Obviously, if it does escalate, that would have negative implications, but that's not the case as at now.
Okay, all right. So this is your view on India, irrespective of what's happening right now, the Indian stock market per se.
Well, I have a rather divergent view on India, which is that I'm extremely positive on the outlook for the economy. And, in India this year and next year will probably be the fastest growing economy in the broader Asian region. And, just to contrast, Chinese growth probably holding at 6.5% this year and next year, whereas India will, hopefully maintain 7.5% growth. The reason why I say my view is divergent is that, we are coming up to the next round of quarterly corporate earnings results, and one has to ask the question as to whether the current valuation of the Indian market is fully discounting the good news that, we're going to get on corporate earnings results. So, that's why, I think that, emerging equity markets will outperform. I don't see much downside risk in the Indian market, but I do think that the upside is somewhat modest because we have to recognize that the valuations at the moment are looking somewhat stretched.
Okay, Mr. Parker, we'll have to leave it at that. Thanks so much for joining in. That's the word coming in on Credit Suisse. For the